All right, guys, welcome back to the Independent Investor Channel. These are rare opportunities to take a look under the hood and see what we're working with. These are portfolio reviews. In this video, we're going to review the holdings within the self-directed Roth IRA account. Number one, this is an account that has over $100,000 of stock and passive assets in it. You guys are going to want to stick around for this video and actually understand what is possible in investing. So here's an opportunity to jump into my second Roth IRA. This is a self-directed account. This is number one. This is actually my personal account. So we roll these out periodically to get a little bit more detail on the holdings within the account and how they're performing over time. Just like what I'm trying to do, I run somewhat of a hybrid strategy with my investments. I really do try to grab a little bit of exposure in multiple areas of investing. Specifically, I'm looking for a passive opportunity within my retirement accounts and also some opportunity on the single stock side with some value, some good dividend plays, as well as a little bit of strategic speculation within the portfolio. And I'll highlight each of those as I work down through the portfolio as we review. If you are tuning into the Independent Investor Channel portfolio review for the first time, I do want you to understand that this portfolio is one of 5 accounts, 7 total actually, that go into the total overall portfolio picture. So this is comprised of just less than $100,000 in this particular portfolio, but it is just part of the total amount that makes up my total portfolio picture. So I do want you to understand that. There's obviously some red in this portfolio, and I do also want to premise the fact that this portfolio was started initially with a starting amount of $1,500. And it wasn't that long ago. We're working with this portfolio now for about 15 total years, okay? And this was actually from an old broker that has been transferred into what is now Merrill, previously Merrill Edge, previously Merrill Lynch. So this is the broker that I've been with. Now, I've only been self-directed investing for about half of that time. So we've really been able to accelerate this portfolio going forward. And in the last 3 years, specific to this account and also to the total portfolio value overall, we've been able to triple our account values. So I don't want for a second for people to tune into this and focus on a red amount here and think for a second that worries me. These positions have been bought in many cases with profit that I've rolled back into new positions. So I have no problem with taking a position into some strategic deep water, specifically these highly on warrants, which we've just heard on the last conference call that they are looking to take the cash option, which is great news for me. I will be converting 800 of these to shares. I will be keeping the remainder of the holding in warrants. Just to monitor and have another strategic position to either sell direct as warrants or to go ahead and either convert those to common shares in the company or to actually sell them outright within the Roth, as those profits will be tax protected into the future. So it'll just give me 2 strategic benefits to either convert those or hold those, but we're going to hold the shares long term in this. But once those shares are converted over, the arbitrage dollars here that are made up between the disparity of the current warrant price and the converted share price of the company will be made up here. So this is irrelevant to me. It is a paper loss that will be made up once that conversion is complete. So Here we've got Boeing on the top end here. This has come back nicely, approaching that $200 mark. This was a nice opportunity, and still is, quite frankly, to pick up this on a discounted share price here. I don't hesitate for a second to. These shares were entered into, I believe I got these at about 187 is the current share price. I don't know what the cost is on this, but we entered into these at during this downturn. We've made some good profit with these, but these shares are held long in this account, and we'll continue to hold them long as they end up making up ground here, as it's been really punished this year through the pandemic. Citigroup, we've added to this position actually. I've increased this share position on valuation. Citigroup is a good dividend payer, and we've went ahead and increased that position from, I believe, 40 shares up to 106 shares total. So just kind of averaged down a little bit on this, and we'll continue to monitor. Went ahead and liquidated Disney, and that was a real big change in this portfolio, with the reduction of the dividend and it really being fairly valued at the time that I took profits. We'll continue to monitor. I still really enjoy Disney as a company. I think it's a company that most people could invest in and hold for a lifetime. It has not changed my thesis on the company as a long-term investment, but I thought it was a prudent opportunity to go ahead and take and render some profits and put those profits to the side there. And IBM as well, we're just continuing to hold this in old tech. Nice dividend payer in the portfolio. J&J, top performer in this portfolio. We've owned this for 5 years plus, and this is a position that I do not hesitate to add to. And it's a cornerstone in this portfolio in the healthcare sector. We'll continue to own this long. It's one of those very few stocks that I put in that category of a buy and hold forever. Right below that, Kimberly-Clark. This kind of gives me my staples exposure here in this portfolio, and it complements the Procter & Gamble holding in the other portfolio. Coca-Cola here. Just one of those dividend kings that I don't mind just holding forever. It pays dividends. It does its job, and we get a little appreciation to boot out of it. Then we're winning the battle for sure. McDonald's right below that, one of my absolute favorites in the restaurant space. We'll continue to hold that, probably anchoring that cornerstone position in this portfolio in this particular sector as well. Royal Dutch Shell in big oil. We're continuing to monitor that. It's just been a part of a sector that's been drawn down pretty heavily, but I like what they're doing with the company, and we'll see where they go with their transition to renewable energy going forward. RTX, Raytheon, has been nice. It's jumped quite nicely. We've got a really large position. This is the largest industrials position that I have in the portfolio, ticker symbol RTX. It is one of my favorites. I believe it is undervalued. So where I have taken some profits in some other industrial areas, I think RTX is the premium play here along with Lockheed Martin. The switchback warrants was a new position that I've initiated. It was nice to go ahead and define my cost basis and switch back at about $15. So that's a nice position that we'll look to monitor and just and convert when that time comes and that announcement comes through the portfolio. We'll swap this over and just convert those very easily to shares. Okay, so the passive aspect of the portfolio now through VBR, which is Vanguard's value, has really come back nicely. I'm glad I held this. I was just about ready to throw in the towel on Vanguard value, but it's fine. It's not a bad fund. I just was venting a little bit when it was down so much. And then right below that, V&Q. Very nice, and you'll notice that I liquidated the position in VPU. I already own this holding in the specialty ETF portfolio with M1 Finance, and I figured this was a nice opportunity as it's run up nicely and the dividend has come off a little bit to go ahead and take some renderings off of this position here. and put that money to the side as some dry powder and look to re-engage when the opportunity presents itself. VYM here at 122 shares. This is the largest passive position I have in the portfolio. And then to complement that with some dividend yield, we've got the international equivalent of this particular holding. So a couple nice complementary passive dividend paying products here. Walgreens Boots Alliance is probably one of the stocks to buy for 2021. Good earnings, good company. CVS has caught fire, and I think Walgreens Boots Alliance has kind of been left behind a little bit, and I think it would be a mistake actually to not look at this as an opportunity to pick up some Walgreens Boots Alliance as well here. WP Carey in the real estate REIT space. Nice performer, nice dividend payer. And then finally, ExxonMobil in the energy space. We'll continue to hold this and allow it to pay us that nice dividend and look to monitor that as oil looks to recover. So with that, guys, appreciate you joining in on the portfolio review. I'll kick you back to YouTube and we'll indeed conclude the video. All right, guys, so we've come back out of the portfolio review. We roll these out for you guys to demonstrate what's possible in investing. This account was started with $1,500. It's been tripled over the last 3 years. We've dollar cost averaged this account up and made some good trading revenue within this, and we've done it within a short amount of time. And your value is going to be found in sitting across from an investor like myself with the experience that I have and really asking yourself, is this possible for you to do for yourself? And the answer is absolutely. Anybody can do this. Anybody can follow the same wealth building strategy that I follow. Employ a little bit of discipline in your own lives to start building wealth for you into your future. Guys, if you enjoy the message coming through, you want to make sure hit the subscribe button for me. Absolutely share the message with anybody out there that you know is just starting out in the stock market and they want some introductory information on how to go about making sense of this gig, asking and answering some of the questions that they may have about what investing entails, and more importantly, what results can be rendered from seeking out an investment opportunity for themselves. Guys, thank you so much for tuning into the video, and good luck in your investment future.